As we roll into the fall and winter housing market, there are still a lot of tricky things to navigate for potential buyers and sellers. Home sales have been climbing across most of the country, and that may still surprise many people. Sales are not exploding, of course, but they are up pretty reliably, even in places like Florida, or maybe I should say, especially Florida. Home sales are happening at a faster clip than last year at this time. On the supply side, inventory has spent more than 3 years building up. In much of the country, there are lots of homes for sale. In 19 states, inventory is back to the 2019 levels before the pandemic. And in some states, there are more homes for sale now than there ever have been. But that means there are 31 states which still have less inventory than 2019. Some states have 60 to 70% fewer homes for sale now than in the pre-pandemic days. Availability of homes to buy in the U.S. is a story of extremes now. Very many or very few. That two-tier U.S. housing market looks to continue into 2026, though for now, inventory is growing much more gradually than it has in recent years. So as for prices, home prices are softening across the country right now. In those tight inventory markets, home prices are up yet again from 2024, but the pace of growth is declining. So for example, home prices in New York were up 7% in 2024 over the prior year and are poised to finish 2025 up 4 to 5%. Even in the tight inventory markets, home price growth is slowing. By the end of the year, we can see headlines that saying home prices are down from the end of last year. So I'll show you some data on that in a minute. So for anyone who bought a home in the last 3 years, really anywhere in the U.S., it's very common for them to be facing a money-losing situation after a transaction. That can be a bitter pill and requires good strategic thinking when home sellers are considering their options for now and for the spring. I'm Mike Simonsen. I'm the Chief Economist for Compass. I do this data every week because I believe the data helps anyone make better decisions home buying and selling. If you like the data, please join the Compass Intelligence email list. There's a link in the description below. Click that to join us. Okay, let's start today looking at home prices. The median price of single-family homes in the U.S. now is $399,000. That's unchanged from a week ago and is about 2% above the same period a year ago. So the blue line is this year's curve of the median price for the weekly pending home sales. This is the price that people are paying for homes right now. It's $399,000 across the country. Home prices by this measure have shown reasonable stability recently as mortgage rates ticked lower. After a little dip in late summer, home prices ticked up in September, which is when mortgage rates started coming down to the lowest level in a year. You can see the purple line from 2024 had the same behavior because that was the same period that rates dipped last year too. So a 2% gain across the country on average means there are plenty of markets with lower home prices today than a year ago. Nationally, over the long history, home price appreciation is closer to 5% per year. So that's because we tend to have a growing population, a growing economy, and we tend to underbuild. So now potential home sellers feel this slowdown in home prices. Definitely across the Sun Belt in places like Colorado. But even in the Midwest and Northeast, home sellers should recognize that we're in this trend and act accordingly. So while home prices as measured by that weekly pending home sales price is up compared to last year, I've been paying attention to price per square foot in the asking market recently as a leading indicator for future sales prices. The price per square foot is a handy normalized measure that controls a bit for the shift in the size of homes where demand is strongest. So, and as of this week, the median price per square foot in the U.S. for single-family homes is just over $213. That ticked down, as you'd expect, for the end of October, but it's also nearly 1% below last year at this time nationally. So in this chart, each line is a year. You can see the normal seasonal pricing peak is in May. That's when the best listings with the most prep and the most buyers are on the market. Now, though, see the blue line for 2025 is under the purple line from 24, and the slope is steeper now than last year. Last year, prices in October had that support from the lowest mortgage rates of the year. Notice also the dynamic from 2022, the yellow line. In the first half of 22, we were still buying everything in sight. Buyers were still getting the best deal they could as mortgage rates spiked. But by June of 22, if you hadn't already bought, demand stopped and prices fell. So by the time 23 started, we started showing home price declines from the previous year. So this data now points to weaker future sales prices than does the median pendings price that I just shared. This is the first of the leading indicators to consistently print below last year at this time. This does not show a catastrophe. It shows a fraction of a percent lower, but it implies that over the next few months, you could start to hear more headlines with negative home prices. Most of the headline home price indexes like the Case-Shiller are still positive nationally from 2024. So the Case-Shiller is up 1.5% nationally as of the latest data from August. By the December data, those headlines could indeed be negative. This leading price per square foot data already is. There are now 857,000 single-family homes on the market with another 227,000 condos for a total of almost 1.1 million homes. That was a 1.25% drop for the final week of October, as you'd expect for this time of year. There are now 16% more homes on the market than a year ago. Pretty much every market in the U.S. has more homes unsold now than last year at this time. Some of those Northeast and Midwest markets are only up a tiny bit, but they're still up. So New York has 10% more homes available now than last year. Illinois has 6% more. Connecticut still may be the tightest market in the country. The takeaway for inventory is that the major growth, the 30% year-over-year growth, is behind us. But supply is still building. The supply-demand equation in the future is still tilting towards supply, just much more gradually now than the past few years. So 2025 should end with about 15% more homes unsold than at the end of 24. And one of the reasons that supply isn't growing quickly anymore is because there are relatively few new listings each week. Sellers don't have to sell and are often choosing not to. So there have been about 61,000 new listings for single-family homes each week on average lately. That's no more than we've had in any recent years and is actually fewer than normal at this time of year. In the pre-pandemic years, it would have been normal to be averaging 67 to 70,000 new listings for single-family homes each week in October. This week, we're at 61,000. You can see in this chart that earlier in 2025, the blue line was above recent years. More sellers trying to list. Inventory grew at a 30% pace over 24 early in this year. Now the blue line has receded and inventory is not growing nearly as quickly. So the new listings pace should drop, obviously, through the end of the year before picking up in Q1. The trend I'm watching for now is how quickly that line picks up in the spring. In a market where consumers more commonly hear that home prices are down from last year, how do they react? Is there a rush of sellers trying to get out sooner? Will those sellers then exacerbate a price downturn? That's a bearish scenario, but plenty of people expect it. But if that scenario is going to play out, we'd see it very quickly in the new listings numbers. As of now, we do not see that trend. We see the opposite. Potential sellers that hold back keep a cap on supply growth, and that acts to support prices somewhat. And that's why we watch the new listings number every week. It's this critical insight to future supply. All right, let's wrap today with the home sales numbers. I mentioned at the top that home sales seem to be picking up across the country. We count every home that goes into contract every week. In October, the market averaged 62,000 newly pending single-family homes in contract each week and another 12,000 condos. 74,000 total home sales each week is not a lot, but it is averaging about 2 to 3% more than last year. As of now, we count year to date about 0.5% more home sales contracts than a year ago. Early in 25, that pace of sales was below 24. So in the second half of the year, the pace has been ahead of last year. So year to date, we're showing now finally more sales than a year ago. Even slight growth is a welcome sign. So that seems poised to continue through the end of the year. You can see in this chart, the blue line is now consistently above the purple line from 24. Like inventory and new listings, the pace of sales declines for the rest of the year before resuming in 2026. Mortgage rates are going to be a big impact on this sales pace in 26. If rates stay closer to 6% or ease under into the 5s, that implies we'd see continued growth in home sales by a few percentage points in the next year. There are lots of scenarios, however, where rates move the other way. So we'll cover those variables in the future as we lay out our forecast for the 2026 housing market. Stay tuned for that. Okay, that's all the data we have time for today. If you want to make sure you don't miss any of the weekly data and video commentary, you should sign up for our email list. There's a link in the description below to add your name to the full list. All right, everybody. Thanks for listening. More next week.